Hello, this is your daily market and macro analysis for November 12th, 2025. The data presented covers the last 24 hours of market activity. Process this information to prepare for your next session. We will begin with the primary equity indices. Analysis of the United States market close on November 11 shows a divergent session. The Dow Jones Industrial Average was the primary outperformer, closing at 47,927. This was an increase of 559 points, or 1.18%. The S&P 500 was slightly positive, adding 0.21% to close at 6,846. The Nasdaq Composite diverged, falling 0.25% to 23,468. This data indicates a pause in the recent rally and a rotation from technology into industrial and value sectors. This mixed sentiment carried over into Asian trading. Japan's Nikkei 225 was down 0.26%, though the Topix index rose 0.35%. South Korea's Kospi was flat. In Europe, the EU50 index is currently trading 0.31% higher. The data shows a market in a state of consolidation, searching for a clear driver. We will now analyze that driver. The central variable impacting market sentiment is the ongoing, record-setting United States government shutdown. The optimism seen in the Dow Jones is a direct result of new political developments. Reports indicate progress has been made toward a resolution. The U.S. Senate has given formal approval to a funding plan to reopen the government. The House of Representatives is expected to pass the measure later this week. This potential end to the stalemate is reducing political uncertainty, benefiting cyclical stocks that are most sensitive to economic stability. However, the shutdown has a secondary effect. It has delayed the release of critical economic data, including inflation, employment, and GDP reports. This data blackout forces market participants and the Federal Reserve to operate with incomplete information. We will now analyze other key macroeconomic inputs. First, due to the lack of official government data, the market is magnifying the importance of private data. Recent week private sector ADP employment reports have solidified expectations that the Federal Reserve will be forced to cut interest rates in December. Market pricing now implies a 68% probability of such a cut. Second, in Europe, market participants are monitoring a speech by ECB official Luis de Guindos. His commentary will be analyzed for any deviation from the bank's current anti-inflationary stance, especially in light of weakening growth. Third, in the United Kingdom, speculation is growing around potential tax increases in the November 26th autumn budget. This is creating a headwind for UK assets as the market anticipates fiscal tightening. Fourth, the International Energy Agency, the IEA, released its World Energy Outlook 2025 today. This is a significant report outlining long-term forecasts for supply, demand, and the security of critical minerals, all of which will impact energy and industrial sectors for years. Analyzing the bond and commodity markets provides further context. In fixed income, the 10-year U.S. Treasury yield is holding near 4.09%. It is caught between two forces, weak private data pulling it lower and optimism on the shutdown deal pushing it higher. The 10 to 2-year yield spread remains positive at 0.55%, indicating the curve is not inverted. In energy markets, prices are slightly down. WTI crude is trading near $60.97 per barrel. Brent crude is near $65.08 per barrel. These prices reflect a market that is balancing optimism for a U.S. reopening, which is good for demand, against IEA and OPEC forecasts of a significant supply surplus building into 2026. Gold remains at elevated levels, supported by the underlying political uncertainty. Finally, we turn to the digital asset space. The cryptocurrency market is in a confirmed, significant downturn. After reaching a record high total market capitalization of approximately $4.4 trillion in early October, the market has slumped over 20%, erasing the majority of gains for 2025. The catalyst for this collapse was a massive $19 billion liquidation of leveraged positions in October, an event that shattered investor confidence and initiated a cascade of selling. The key indicator is Bitcoin. It has fallen 9% this week and is trading just below the critical psychological and technical level of $100,000. More importantly, Bitcoin has broken below its 200-day moving average. This is a classic, powerful bearish technical signal that often precedes a longer-term bear market. This crypto weakness is not occurring in a vacuum. It is being correlated with rising fears that AI-related technology stocks are in a bubble. A risk-off contagion is spreading from frothy tech to crypto as investors liquidate high-beta assets. This concludes the briefing for November 12, 2025. In summary, the market is in a holding pattern. Sentiment is balancing optimism over a political resolution in Washington against deeply bearish technical indicators in key growth sectors like technology and cryptocurrency. All systems will continue to monitor Washington for a final resolution to the shutdown. Please process this information to optimize your strategy. End of transmission.